Very good morning, everyone. Boris, good morning. Mana, very good morning to you both. How are we doing?
Good morning.
Morning, Boris. Well, I hope you guys can see the screen thus far. Bit of a crazy morning, to be honest. Well, where to start? Got up early as per usual, went to mark the charts, probably a little bit too early. Decided not to post anything as everything was moving. And yeah, temptation got the better of me on one particular pair, US dollar CAD, and almost had a look at GU as well. As you can see, my favorites for the day, UJ, UCAD, GU, and EU. So we'll go over the DXY first and foremost, and we'll go over the better pairs that, in my opinion, are best to trade today. And then we'll go over the worst ones to see if we can make a bit more sense of them all. So, um, where are we? DXY, gaps everywhere, to be quite honest. We've got a gap that you can see here on the 4 hour chart created last night. Then we have a gap that was created, what's that, a couple of weeks ago. So, really, in order for these gaps to fill, I'll state the obvious that the DXY has to move bullish. It's pretty much or what I have been forecasting, and a lot of others in Frgnt Marsh have been forecasting as well. But to be honest, it's just all about timing, all about the fundamentals. And really, to be honest, we just continue to do what we're doing, keep marking the charts as we are, and see how we move. So, weekly time frame, weekly order block looking for price to go longer. We've gone over that many, many times already. However, or in addition, I should say, looking at the daily, this daily order block is still very much so in action. It's still valid. Prices coming in, wicking above and pushing off, then prices coming back. I'll show you how I'm looking at it. Pushing off, coming back down, and then we're in and around this area. However, we've got we've got the daily 50 MA. I've been up way too early. We've got the daily 50 MA that price will look to move towards. Of course, moving towards that will fill most recent gap, and also moving towards the 4 hour 50 MA, price will also look to fill the most recent gap. So on the 4 hour time frame, most important in my opinion, compared alongside the 15. Once we understand the higher time frames, they can pretty much go to one side. Now, had this 1 hour order block marked on the chart yesterday, price dipped in it. I guess that would have been today, to be fair. And also alongside that, refined that order block down. Price dipped perfectly into this 15-minute order block just here. And as a result of that, prices then took off again. So looking to refine some more areas down, highlighting an order block as a result of simply just this bullish engulf or bullish candle that's left a 15-minute order block behind. It's already mitigated. However, what it is an area in the market where, and as we have seen, and I've taken positions from this order block in line with, let's say, we could go US dollar CAD longs, for example, or GU shorts from these types of positions. So once price comes back into this order block, straight away I'm going down to the 1 minute time frame to see what kind of price action is going on in and around that area, particularly engulfing candles. Bullish engulfing candles is what I'd be looking for today, coming out or within this order block as a little bit of confirmation, heading back to the cross pair to see if my setup and entry criteria is still available. Then I'll be looking to go for the position. So that's what I've got at the moment on the DXY, looking for really that gap to fill today. We know that gaps may not necessarily fill in the day, but it's certainly a confluence, particularly because we've got the 4 hour 50 MA where price we could look for price to gravitate towards that before then respecting perhaps the most recent price action. But as a result of the gap, to be honest, let's say the most recent candle actually closed above that 4 hour 50 MA of what we're seeing here on the 4 hour time frame. And then of course the gap created price to then start closing below it. So what I believe is happening now, hopefully once London opens, we get that recovery. So Asia's pushed price down. Hopefully then London will step in, bring price slightly higher. And then with a bit of luck, New York would also step in to continue pushing price up towards these highs. However, I think that would be a little bit too easy to forecast, and I don't think the day would be as straightforward as that. So just keep on our toes. As you can see, I've got alerts crossing down below that 15-minute order block. And to be fair, what I'll move that slightly down to see if price is going to start closing above this slight little area that we have based on that 15-minute time frame. So the DXY can be as intricate as that, for example. Once you see areas in the market that were previously not being broken. Once you get a candle to break above that area, that's more than likely the start of your confirmation for the confluence to then pull back into an area, could even be into these lows, but we have that order block there available before then looking for price to move away again. So that's the DXY for the moment. And what I'll do is go straight to US dollar CAD to explain my reasoning behind taking that. So US dollar CAD, I've been looking at US dollar CAD pretty much all week. I really want to take those longs on US dollar CAD. I think it makes great sense when you start to compare that alongside the DXY. The DXY has reasons to move up, then we should understand that so should a US dollar cross pair, particularly on the primary side being US dollar. Now, US dollar CAD for me at the moment, we're in that higher time frame daily order block that, in my opinion, caused a higher time frame break of structure. So what we can see here on the daily is that price was failing to break above that daily 50 MA. Price came into this area. I'm not sure what's to the left, but nevertheless, the liquidity was evidently here for whatever reason, and price pushed up, closed above the daily 50 MA, and on it went, breaking all structure areas, even highs to the left here. As a result of that, as soon as price wants to come back down into that area, I'm then looking for the reaction. We had that wick in, we've looked for the reaction above it, then prices come back. Potentially that is now even confirmation. However, what I've done is got rid of that order block, moved it to one side and seen and seeked to understand new price action. So as a result, on Monday, we had this bullish candle that left an order block behind, this daily order block, which as I go to the 4 hour time frame now, we can see where that is. This order block just, where's the difference? Just here, highlighted and refined within that order block. There were no other 4 hour order blocks for me to look to manipulate. This 4 hour order block was mitigated, tapped in here, and price moved off. Hence why then we had this 4 hour order block then available. Once this 4 hour order block is now available, then I'm looking to refine that area down as well. And then price came in into that order block this morning. And then, as I said, unfortunately, well, I should say fortunately for myself, I'm usually up around that time anyway, doing bits and bobs. Up at the charts into the 15-minute time frame, thought to take a bit of an aggressive position, thought why not? I rarely trade those areas in the morning anyway. And then what we saw was a bullish engulfing candle coming out of that area, which then left a 1 minute order block behind. I didn't enter immediately on the tap of that 1 minute order block. I wanted to see how the next candle would close. And as you can see, another bullish engulfing candle that then left another order block behind. So I'm doing exactly the same on all time frames as I do on the 1 minute time frame. But what we don't have, well, almost had it, but I couldn't journal it as a textbook trade. I'll show you guys in a minute what I'm talking about. Another order block, nevertheless, and then price came in, and as a result of price tapping, I just pressed instant execution, and then price started to move away. What I was talking about was breaks of structure before looking to take that position. So what I had was this to play with, which I can't really consider a clear break of structure, hence why it's not on there. But I thought, well, you know what? I will go for it. And that's the position, to be honest. So not a textbook trade, not even a good trade. It's just an okay trade. And that was it, to be fair. So that's US dollar CAD, which I'm currently in, sat at break even. So I'll get rid of that now and look to analyze how we could seek to re-enter or enter US dollar CAD, because it is a favorite for me based on the 4 hour. We've got lots of room to the upside to that 4 hour 50 MA. I recognize that we are excuse me, very bearish on the 4 hour, lower low, lower high, lower low created. This could be a lower high, and my entry in fact could have been the extension for the lower low, but for that order block holding, I don't believe that price will dip and close below it. Hopefully it doesn't, because then that would kind of, it wouldn't flip the bias, but I'd have to start the process all over again in order to look for those long positions. So at the moment, still very much so long bias on US dollar CAD coming out of that 4 hour order block. And what I'd also add to that is previous price action of last week was most certainly bullish. As bullish, bearish, bullish, bearish. As you can see, lower lows, lower highs, lower lows, lower highs, and lower lows. However, the start of this week, what we've had is price really show us, well, actually, we could be looking to now go bullish. And what we have is the opposite in terms of we now are high, higher low. So my position, in my opinion, could also be the higher low area for a potential higher high in towards the 4 hour 50 MA before then looking for a slight rejection back down from it. Hopefully then at some point we'll close above it and start printing bullish for the week. So that's my overall thought process. So on the 15-minute time frame, I'll be looking to get into that today. A couple of options to be fair. I won't be looking to re-enter immediately. As I say, there is a 15-minute order block here, which I'll move to one side now as it's been used, and we'll just see what is available. So that order block's been used. Nothing left behind. No. And we still have Asia available, so won't be looking to highlight this 15-minute order block just yet. I'll now wait to see what happens when London opens. I won't take any more positions before London opens. I very rarely trade Asia, to be quite honest. So that's where I lie at the moment. So how would I look to take that? What I want to see is some structure points broken on that 15-minute time frame. And I see that structure point quite clearly here on the 15. So the most recent low, in my opinion, came from in and around this area. Therefore, once we've got a break of that area, pull back into an imbalance, hopefully we've got a 15-minute order block left behind for us to take that continuation. What also could be available is a variation of Asia range. What you could say is, as a result of this most recent high, try to allocate that most recent high to, actually, no, the 15 minutes been used, so no Asia range there at all. In the opposite direction, we haven't made a low, we haven't broken structures, so no, not from here to the downside either. It's not quite as clear cut as Asia range can be. So what I will do is I'll put this on the chart for good measure. And we'll see once London opens, if this order blocks hold, if that order block holds, once London opens, perhaps break structures, come back into this area. Once again, a lower time frame break of structure from that area, then I'll look for a long. We've got Asia range. Hopefully, if we break structure but don't fill Asia, that would be the best case scenario. Then we'll have Asia range highs to fill as a confluence, as well as the fact I'll be looking to take price back up to that 4 hour 50 EMA. So that would be the position that I'd be looking to take come London open, something like that. And then 4 hour 50 EMAs around that region. So I think that could be quite a nice trade. Areas for a stop loss, well, you can see some nice areas here where price may want to look to gravitate towards to grab that liquidity to push price slightly higher. You can almost anticipate that, but the way we'll look to safeguard that is by waiting for a break of structure first, which also could be lower low, lower high, a deeper pullback for a lower low. And your only way to safeguard not entering a position whilst price is making that lower low is this cherry on top of the cake, waiting for that confirmation. Because what could happen is price come back down, grab the liquidity or grab the stops, whatever you'd like to call it. I very rarely refer to it because I just wait for confirmation, which usually is the safeguard against jumping into trades earlier. And then you'll get your break of structure down here. bullish engulfing candle, you restart the process, and that also would be a very nice position. So a couple of ways to look to take that. That would be the best position, the best way to take it, in my opinion. The worst way to take it, or not so much the worst, but a different way to take it would be, what would we have? You could have a clear snap of Asia highs. That would be actually quite a good way to take that position as well, because that will show the clear direction that wants to come out of US dollar CAD. And once you've got that, then again, it's as very simple as locating those order blocks. If there isn't an order block available to take your position from, then you'll have to wait for a bullish 15-minute candle, or better still, a bullish engulfing 15-minute candle, which would then give you the 15-minute order block to look to manipulate once price then comes back down, like so. You'll then have that bullish engulfing candle, which would give you that order block. Price would then come back down, and this could be a limit order or even a 1-minute break of structure. But once you've got that break of Asia highs, then this could also be a limit order. Once you get the 15-minute bullish engulfing candle with the order block left behind, as soon as price returns, then that would be quite a good limit order. And I believe that should safeguard against the grab below. So that's US dollar CAD, reasons why I took it, and how I'd be looking to take it today. I think US dollar CAD shaping up nicely. And of course, using the DXY as confluence, as we said, it's all about those areas. You can see here, all we did was put a line on the chart where price was failing to break above and below. And although we had that wick above, that was looking at the time of putting that in the on the chart, that was a bullish 15-minute candle. You can see here that DXY clearly is showing that there may not be signs for it to go bullish just yet. And then what I'll be looking to do is anticipate price coming back into this area now, going down to the 1-minute time frame, as I said, look for what price action is doing, and then potentially we'll go back up. The better way to, of course, get your confirmation from that DXY is once you get that 15-minute candle closure above, then of course that candle can pull back into the imbalance left behind of that candle and then look to go further. So a lot to take into consideration on the DXY, but I do feel like once we start monitoring that, as we are, to be honest, it does beg for very good trading. So that's US dollar CAD, DXY, UJ. Another nice favorite of mine, UJ, daily time frame is where it's really kicking off. We had the first daily close that didn't actually wick in or wick back down to these lows yesterday with a bullish daily candle. Of course, as a result of that weakness coming out of the DXY last night, then of course we've had that drop back down to those lows. But actually, the drop back down is pretty much what I had wanted to happen. I haven't removed this scenario from yesterday. I thought the best way to look to take this is once we've anticipated, of course, we understand that price was in a range. We've broken out of that range to the lows, but also we're in a 4-hour range. So what I wanted to see happen is price break out of that 4-hour range. Of course, once price breaks out of most ranges, price then wants to drop all the way back down to refill that range, look for the liquidity, and then potentially the trend will start in the opposite direction. As you can see here as well, we were trending up, we range, we broke out, and now we're looking to pull back up. So I like US dollar UJ a lot. It's just about timing again, when to get into that position. There's no 4-hour order blocks for us to look to manipulate. We're just using that daily order block, 4-hour range. And what we have as a result of that move out of the market this morning, we've got a tremendously large 15-minute order block. But I wouldn't say it's too large based on the targets. If we were looking to take this just to the 4-hour 50 EMA, then yes, that is a very big order block, and it's not really going to pay the bills, to be quite honest. So what I'd be looking to do is actually refine this area down. So I may as well look to do it now and see what it is. And you can see there's a nice 5-minute order block just there at the low. So that's probably what, or not probably, that is what I believe is best to wait for, this 5-minute order block. Let's put that on all intervals and we can see where that lies. There we go. So that's that for now. Back to the 15, and you can see the range now is a lot bigger, or better, I should say, to the 4-hour 50 May, where we must understand and look to respect that price on the 4-hour time frame. If I head back to it, we are respecting it to the downside. Particularly, I wasn't concerned about the EMA once it's in a range. As you can see, the EMA is doing nothing. But once we've dropped out of that range, now really the play of the range would be, well, we've broken out to the downside. So actually, we'd be looking for the daily range. No, where am I? Where are we? Here we are. Yeah, so we've broken out of the range to the downside. So what we'll be looking for on the daily, in fact, is for price to pull back for the rejection in that direction. However, we'd be looking to trade that extension, and we have that supported by the fact on the 4 hour, we've got the range to the upside. So UJ just it looks really, really, really good in terms of looking for a long position. So my alerts, as you can see on that 15-minute time frame, there's quite a lot of them. If price moves up, that's only going to give us more confirmation when price returns that this is going to be a nice area to trade from. And then you can see I've got my alert there, which I will move lower because I can't really, well, I can't take that position from that 15-minute order block based on the fact that price is respecting the 4 hour 50 MA. However, what I will say is that my long-term targets would be up here, which would only just fill the position of the drop, which would make good sense. So on that 15-minute time frame as well, you can see it's just textbook range behavior. In the range, highs and lows, you can identify them, and then you get the break up, pull back, hopefully, or what would usually be here is an order block for you to look to manipulate, wait for your confirmation by way of bullish engulfing candle, and then you'd have this process. However, we've got it now. Therefore, once price comes back to that area, then I'll be looking to take that higher. So I think that's a really, really nice setup. Definitely one of the favorites of the day, UJ, for me personally. Next favorite pair is going to be, look at buying this is suicide right now. I don't believe so. We'll see. GBP US dollar. Where are we? Okay. I almost got tempted into this morning, I have to admit. I didn't take it because I was already longing UCAD at the time. But I think also it's looking like potentially a half decent setup. The only caveat to that is there are a couple of areas which I could really see price going to. Skipping the higher time frame just for a moment, the reason for that is we have created a high. If you just put one line across the chart and understand that price was failing to break this area, and in fact we were looking, or I was anticipating shorts, let's say from these highs as a session high, we've then broken out of that area and created a higher high. So in fact, a higher high should create a higher low for a higher high continuation. What I've done is place in an old 4 hour order block to see if price is going to look to respect it. So just to revert back to higher time frame for a moment, weekly order block looking for price to pull short out of that area. However, the downside to that is a 4 hour 50 MA is pretty much doing a good job at pushing price higher at the moment. And so what I've done, as I said just a moment ago, is placed in a new, not a new, but it's an old 4 hour order block that has been mitigated many times over. However, what's important when there are no other 4 hour order blocks, it's a good place to start from, i.e., why is price holding in that area? It doesn't mean take immediate shorts from it, much like what I was considering this morning, but it does mean, well, once you put that on the chart, as I've just done, sync it on all intervals, does it make sense to understand, is there a refined area just there? Then looking for a short, do I then have the range down to the 4 hour 50 EMA? I would do in order for myself to at least manage the position to break even. Like yesterday, was it GU or EU? Can't quite remember if I open up my journal for a second. Where is it? Uh, I took a GU short. Yeah, that was it. Once the 4 hour candle had closed above the 4 hour 50 MA, I had to manage it a lot more aggressively. Where was I going with that? Yeah, just really explain that the 4 hour 50 minute is doing its job, therefore it must be respected in terms of when price comes back down, because that's exactly pretty much what saved me against a loss yesterday on GU Asia range shorts, because I recognized that price had got to that 4 hour 50 EMA and closed above it, meaning retest to go up. And that is what price has done and continued to do thus far. So to the 15-minute time frame, this is that 4 hour order block that I've re-put in the market to see why is price holding there. And then once refined, you can see this 15-minute order block that hadn't been mitigated, but for price tapping into it in Asia. And then as you can imagine, I've come to the chart around about that time, even earlier, seen how prices come up into that 15-minute order block, tapped it, left a wick rejection to the high, and I was waiting to see if price would retest that wick high, which would have been a 1 minute order block. I would have then looked for a 1 minute break of structure, much like on UCAD, and taken it short. I'll be honest, that's exactly what I was waiting to do. But price didn't return back to those highs. So I wasn't interested in taking a position that wasn't from as high as possible for me to put my stop loss above the area that I want to. So at here and now, of course, the best type of situation is to understand what price is doing on the 15-minute time frame. So high, deeper pullback for a higher low, high confirmed, higher low, high, which confirms a higher low. So that's pretty standard, to be honest. I've got the structure point, in my opinion, for the correct place. The best type of scenario, could I class this as an Asia range? You could, in my opinion. So what I'll say is at some point in time, this bullish price action where you can't really decipher any structure points, it's just parabolic. Therefore, what you should be looking to do is identify areas in the market where price had made highs from. So here's a high or an area in the market. Here is an area in the market. And down at these lows, also an area in the market. So to take an Asia range, I need to see that first and foremost, there is a break of structure. Understood that based on structure in and around this area is where we took an Asia range from yesterday to try and fill Asia to those lows. However, as we look to go slightly higher, what you could say is that, well, from this area, price made a low, which broke structure points to the left. Price has come back into the area. So if you did want to take that aggressively, although that 50-minute, yeah, no the 15-minute order block isn't really available. So it's been tapped. I know it's only been wicked. So if we stay true to that, leave it alone for an Asia range position. I wouldn't really be wanting to take that short based on a 1 minute break of structure anyway. I think it would be much better to identify an area in the market like we've done on the DXY. This would correspond very nicely to it. This would be more of an aggressive way of taking that position. Wait to see a bearish candle close below that area. Hopefully that will then allow you to have an order block, which we already will double check it, but I'm sure there's a 1 minute order block up there. Wait for price to close below on the 15 or even on the 1 minute time frame if you want to be super aggressive, and then look for the short back down to the imbalance in the opposite direction, because obviously, as you can see for now, we are still bullish until further notice. Even if price takes this a deeper pullback here as a result of not breaking this structure point, we are still bullish, and this would just be after the high, a higher low for a potential higher high continuation. Therefore, 1 minute break of structure without what I mean by that is a 1 minute break of structure just here isn't really good enough unless you're going to be really aggressive and monitor that price action consistently. Then I wouldn't be looking to do that. Hence why I didn't really feel to go for it, but US dollar CAD I thought lined up a lot better with the DXY. So that would be, let's say, not the, I wouldn't call it the worst, but the more aggressive type of short position. The best position, as we've said, structure point here. So let's see if price will break that structure point. Of course, breaking that structure point will break and fill Asia, leaving us with less of that confluence, i.e. Asia being available. But I do feel like once price has broken structure points, that is a better confluence than just the Asia being available anyway, because as you can see on the charts, that Asias aren't always filled in the day. It is just a confluence to add to your trade that we know Asia is likely to be filled at some point. So potentially it could happen during the day. But a break of structure is certainly a more I would say accurate confluence that you have based on price action and structure. And that's what we trade, right? So a break of that structure point, pull back into imbalance, that would be the best type of entry criteria. And then once price, or rather setup criteria, excuse me, and then once price gets back up to those highs, as a result of no longer having that order block available, why I've kept it on the chart, of course, is because the importance is that price isn't closing above it. The moment price closes above an order block, then you're into a completely different territory where price is just confirmed bullish. Therefore, in order for you to look for a short position, you have to wait for those structure points to be broken, or if you want to be slightly more aggressive, like I took where is that? An AU short last night from a point from an area in the market. A bearish engulfing candle would allow you to be more aggressive because that will give you the order block then available for you to trade from instantaneously. However, as I've already said, the best type of price action is for price to, or the best type of setup criteria is to wait for price to break. And I understand that that does look as if you are missing the trade, but really it isn't. That is just the setup being confirmed because once your setup is confirmed, however you want to enter that trade, it does matter, but you've waited for the setup. And I would say the setup is a lot more important than how you enter the market. I've spoken about limit orders many, many, many times over. I used to trade limit orders pretty much exclusively, and I was very successful doing it. So, but the key to that was I was waiting for the setup first and understanding that, well, I waited for the setup, so why should I just sit there and wait for an entry criteria? The setup is what I was waiting for, and I've got it, so I would like to enter that trade. So the setup is definitely very important. In fact, the highest level of importance. So yeah, setup for me, break of this to be aggressive, break of this structure point to have your ultimate best level of setup, and then your entry criteria. Pretty much as you wish, but I always suggest waiting for at least a lower time frame break of structure, however that may be. What I mean by that is 1 minute time frame could be printing up like this in terms of 1 minute structure. Then, of course, if you get a break of the most recent high or low, that is clearly a break of structure. Wait for price to come back up to either the 1 minute order block that is always going to be at the highest area, or if you want to get in that position sooner rather than later, then as a result of a 1 minute break of structure that's come, let's say, from a 15-minute bearish engulfing candle, you will also have a 5 minute order block as well. That would allow you to take that position a lot sooner. And then my suggestion would always be cover at least the 1 minute order block because more than likely price will return to that 1 minute order block at some point anyway. But it's just the fact that you wanted to get into that trade as a result of finding your setup. So it makes sense either way. So that is GU, the best and let's say the least best methods of taking that position. And as I said, if price breaks this area, remove that 15-minute order block, seek to understand is price still respecting the 4 hour order block. If the 4 hour candle closes above this order block, then again it really is completely different. Because then you want to really start looking to the left to really building your picture up. If you don't, then of course you're going to get into the realms of a reversal type of trade. At the moment, we have the support from the higher time frame weekly order block and the 4 hour. So hopefully it stays that way. If not, then I'll update you guys accordingly. But at the minute, it looks as if it's holding. Got a couple of wicks that we might look to retest as well. Hence why always waiting for that break of structure is the best way to avoid this type of situation occurring where you can see those triple tops, where clearly triple tops suggest a lot of liquidity in the market as a result of retail traders simply setting their sell limits or their sell orders like that already in the market. And you can see that based on the fact that price has tapped into an order block and has had the move away. So just be quite patient with it, in my opinion. Wait for price to leave, come back, and then that is your highest level of short position. So that's GU. I like GU as well. Good favorite. and also EU as a nice favorite, which would be a nice guide. As we can see, this 4 hour order block as well, I've replaced it in the market. It wasn't there yesterday, I don't believe, but I figured, well, why is price holding in this area? What's there? And there at one point in time, there was a 4 hour order block that's available. However, this 4 hour candle here mitigated it straight away. And look how we've closed above it, the last, not above it, but look at how we've closed into it. But look at the importance of not actually closing above it. We've had the wick above, but we haven't closed above it. And that's very important. Hence why it's still on the chart. So, higher time frame EU, weekly order block, daily order block refined. We came out of the daily, didn't close above. Again, very important, not closing above a daily order block. Therefore, the direction of the trade itself is still being respected. In this instance, we do have good enough range for the 4 hour 50 MA. We'll have a look once we get to the 15 to see it a lot clearer. But that's really the weekly and the daily. The weekly time frame, weekly order block holding price below. We're not getting too much. I think we could start actually entering a bit of a range. I can see some clear highs and lows here, to be fair. Let's have a look what that looks like on the 4 hour. Yeah, maybe we're starting to range. Look at that 4 hour 50 MA. It's no longer being as dynamic as you'd expect it to be. And you'll gauge that illustration by understanding, well, how does the 4 hour EMA usually act? We can see here. Look at the difference. And now I can see that the 4 hour 50 MA is just kind of going through the middle of price action, which often suggests we're about to enter into a range or the range is confirmed. So actually, my thought process on EU has slightly changed just now as a result of seeing that. Let's go to the 15, make it a lot larger and see what's going on. So no, that's not the 15. This is the 15. Cool. So we believe, or I believe, that this could be a large 4 hour range. It does look like it, in my opinion. Let's see. And also what you can see, we've had the clear breakout to the lows, clear breakout to the highs. Yeah, so it's definitely a range. So EU may not be a favorite for me, actually. We'll just have to see. So if we'll play this two different ways. If I'm correct, and this is a range, or let's go with the structure first and foremost. If we believe that, well, it's definitely a range, but let me head back to the four to see what's really going on. Because how I looked at this morning was like so. If I can bring that larger for us. No, cool. How I looked at this morning was that price was actually stepping down. So we had a low in the market, a lower high, a lower low was confirmed, lower high, and we were searching for the lower low, but yeah, that's definitely hasn't happened. So it is a range, therefore, let's take it as it is a range. So for a range, highs and lows only, nothing in the middle. Hence why I should now be looking to get rid of, just reluctant to do it because it was a favorite. No, I'm gonna have to let it go. I'm going to get rid of this 4 hour order block and understand that I'm trading in a range. Therefore, I cannot trade in the middle of that range. I'm also going to get rid of this 15-minute order block as well. Um, because if this is a range, which it quite clearly is, I don't know why I'm struggling to get over it. It's definitely because it was a bit of a favorite for me, looking to short it. I can't take that position from in the middle of the range. Therefore, it's highs and blimey. I'm all fingers and toes today, guys. Sorry. We need to bring that back. 15. Okay, that's better. Therefore, if I want to take a position in the range, I need to identify the highs and the lows of the range. Now, the highs are no longer in this area for me as a result of price not actually breaking structure. If price had broke structure to the lows, then absolutely I would anticipate price to come into this 15-minute order block and look for a turnaround. However, that isn't the case. Now, what I'm seeing is this 15-minute order block right there up at the highs, and that's where I'm going to put my alert. With that said, we know what happens in a range. Price is being manipulated, or however you want to call it. Therefore, it's not a term to look to take immediate short positions from this 15-minute order block. What I'm going to have to see from that area is that's yeah, I'm going to have to keep going with that. Is price come up like so? Look for a price to break structure. Give me another 15-minute order block. I have to take it via a bearish 15-minute engulfing candle. That will safeguard me against type of manipulation from a range like that, where immediate sellers are taking in and then flushed out. This will safeguard me against it, and then I'll look to take the position short. So, unfortunately, what looks like a good position, I'm just gonna have to let it go on EU and just look at GU instead. Let me see if GU has the same kind of elements. No, I'm not gonna say so. GU, EU. No, for me, EU it's quite clear, whereas GU. It's not as clear. And you can understand the reason why we're in a range. The daily 50 MA is keeping price to the upside, and price is respecting it. So the best case would be price to break below that daily 50 MA, and then we'll have exactly the same like always, have a break below, pull back, look for the short. Now, GU, for me, the daily 50 MA, of course, price is respecting it, but price isn't on it. So we've got range down towards it. Whereas EU, we're literally on the daily 50 MA. So yeah, hopefully tomorrow we'll come to the chart. Feel free to trade EU how you guys see it, but that's just my interpretation. I'd be happier to see price break that, give me a daily candle close below, and then I'll join the party with you guys at a later date. But that's what I've got for EU currently. So I've got an alert. I'll keep it up at the highs and the lows. Alternatively, no, there is an alternative. That's EU. I'm gonna have to move. I'll keep it here as a favorite because I'm not quite over it just yet, and we'll see how it goes. But doing the work, you just kind of have to trust the analysis at some point, your technical ability. And once you see the range, you identify what the EMA is doing, that is quite clearly going through price action on the 4 hour. And I can't really avoid that. Look at the difference on GU. We are going through price action, but not to the same extent as EU, in my opinion. So, yeah, I think that's quite conclusive. Right, to the least favorite, which are also pretty good. I think we've gone over have we gone over GJ? No, I don't think we have. GJ. I like GJ. The only reason it's got a yellow is because maybe we have gone over GJ. No, that was UJ with the 5 minute order block. Okay, we've got a big 50-minute order block on GJ. GJ. Why the longs? Well, look how price is respecting that daily order block. Wick, wick, wick. And the good news is yesterday's daily candle closed above the daily 50 MA, meaning that this current daily candle, I'd hate to say it, it could be a little bit. I'm not late to the trade because I certainly didn't have an entry, but hopefully we aren't already rejecting that daily 50 MA now to start closing above it. We've got good enough hours for price to want to pull back down. You can see we're not an awfully long way away from that 15-minute order block. We've still got a long day ahead. So what I'll be anticipating is price to slightly dip down again. Let's hope that it comes deeper into this 15-minute order block. What we'll have is then a 5 again, refined just like on UJ. And I'll look to anticipate price to come down to this 5 minute order block and look for a long position from there. Let me put this on all intervals and then we can have a better look at the 5 minute time frame. No, we don't have. Oh yeah, of course we do. See that bullish engulfing candle will always leave you with an order block behind on the time frame that you found it on. You're just gonna have to trust me on that, guys. It's just the facts. Right. So why I like GJ? Well, look to the left. That daily order block that caused that move, refined that area down. We had only one 4 hour order block within that area. Price has wicked in beautifully. When was that? Last week, and off it's gone. However, it hasn't gone too far. And what I like is that price has moved off, shown us that there is liquidity sat here as we would expect from that daily time frame as a result of that move again, like on UJ, that has broken structure points to the left. Therefore, if price wants to come back down, that's where I want to seek that liquidity to take price higher. Now, let's go to the 15 to understand what could be the play, because as you can see, there's not an awful lot of structure that we can consider to be broken before looking for that long position. So confirmation becomes a little bit harder, or what you could say is it just becomes slightly easier with what you need to wait for. Because if you've got structure points, you might then want to start looking to take positions earlier, like how I did on US dollar CAD, and trade towards the structure point, managing your position along the way. But if there isn't any structure points going on there, then it's quite clearly what you're going to have to wait for. It's going to have to wait. It would have to be a bullish engulfing candle, because once price then starts to return back into that order block, you're going to want to see a break of structure as price comes back. If you wanted to be more conservative, of course, more aggressive, you'd be looking to take that instantaneously, but it's not something that I would suggest just yet, based on the fact that if we start to zoom out, again, areas in the market where we know price could maybe want to gravitate towards. We've got clear session areas here. And again, it's nothing that this is based, let's say, on strategy. It's just based on how you can view the market in terms of where is price likely to want to go towards to fill those other areas of imbalance that we may just not see, right? What I mean by that is 5 minute order blocks, 1 minute order blocks, etc. So the best way to safeguard yourself against that, as I always say, wait for price action to show its hand first and foremost. So price has come down into an area, it's pushed off where there's been nothing to the left, and it has given us a 15-minute order block. So that's great. However, once price comes back down, allow price to break some structure points and don't sort of get too excited about it, but just understand your setup is developing, and that's always good news, right? So I've got an alert. It was at the 15, but what I'll do is bring that down to the 5, because could I take it from the 15? Hmm, Probably not, because if price comes down to the 15-minute order block, and let me move that for a moment and create the scenario. If price comes down to the 15-minute order block, taps it, and gives me a bullish engulfing candle. That's not going to be good, because that bullish engulfing candle will then allow me to take another 15-minute order block, which then I'm even higher. And I want to protect this wick. I want to protect that Asia that's available. Then you'll start looking to the range. We understand the daily 50 MA is onside for the entirety of the day as a result of price closing above here, above that daily 50 MA anyway. So the daily is not a problem. That's trading with us. However, the 4 hour 50 MA, if I just head back there, is certainly not. That's trading against us. And we can see here that price is respecting it to the downside. I think even on my actual 4 hour chart, we've got an order block there where you could foresee price potentially to want to turn around from. I don't believe price will turn around from there. I think price will continue higher, but nevertheless, there's a 4 hour 50 EMA being respected, bearish engulfing candle, 4 hour order block. So it would be silly, based on your position, to anticipate that price is not going to want to reject that area. Let me put that on so it makes even more sense. Sync it globally. You can see straight away on the 15 the traffic that you're going to run into if you start stretching your entry. However, if you start to bring your entry lower, you're even hitting take profit by the 4 hour 50 MA. So be very consistent in your method of entry, or rather where you want to enter from. So for me, the only possible way for me to enter would be from this 5 minute order block. Even with that said, I would want price to come slightly lower, then I'd more than likely go down to the 1 minute time frame once prices come in, because we still have to understand, well, we are in this 15-minute order block. We're just not going to trade from it. Then we're going to be in the refined 50, which is the 5 minute order block. And so I would be waiting to see 1 minute structure broken to ensure that I'm still as close as I can be to this 5 minute order block. Once you get the 1 minute break of structure, repeat the process again is what I'd be looking to do. Have an order block again as a result of this bullish break of structure just here. And then hopefully, not only are you going to be within the five, excuse me, not only will you be within the five, yeah, but you'll be even lower within it. Therefore, instead of having to hope and wish for the best to make a decent trade, by the time price even gets to that 4 hour order block, you're a winner. So that's how I'll be looking to take GJ. I don't know why it's Amber, to be fair. That can definitely replace EU in my opinion. While EU is there, has it moved? Yeah, I might struggle getting over that today, but it is what it is. So that's GJ. I like GJ, not bad at all. GCAD. This would be nice and easy and quick for us to do. GCAD, nothing, in my opinion, until we break structure above this 4 hour range. You can see it even clearer on the daily. Again, much like EU, we are in a daily order block that looks where price is going to be looking to be pushing higher. However, we've got the daily 50 MA where price is failing to break above. Hence why we're getting that indecision in the market and we've got the range. So hopefully we get a bullish daily candle today, close above that daily 50 MA. We get solid price action trending on the 4 hour time frame as well. We'll have the breakout, the pullback into the range, look for the long position, come to the end of the week, rejecting that weekly 50 MA. So GCAD, although it's a no play for today, I think come the end of the week, that would be a firm favorite, particularly if if GCAD closes if GJ, blimey, if GCAD closes bullish, if it closes bearish, then it's slightly more annoying. But you'd still be using the 50 EMA for the week to push price higher. As you can see on that weekly time frame over here, the weekly 50 EMA is doing a very good job of keeping price above. So even if that weekly candle starts to print all the way down here, we still, although it's a bit far-fetched, the strategy would be to anticipate a rejection of that weekly 50 MA for the week, providing you have liquidity sat in an area, which we can see here. There is a 4 hour order block that created a break of structure to the left just here. Therefore, it's valid. So if we break to the low, pull back, price would then look to gravitate down towards this area, and then we'd bring price slightly higher. So that is GCAD. Don't mind GCAD at all, but absolutely not yet. And then AU. It's unfortunate for AU. AU is and to be fair, this might be a decent confluence that EU might not be ready, even GU might not be ready, but I had high hopes for AU as sort of the final pair of the day. Weekly time frame, weekly order block, looking for price to come short out of it. We had a decent reaction from the area, but again, price isn't really doing what you'd expect from that area. Price is just kind of hovering around, not making any real clear move, which is quite unfortunate because I really wanted to sell AU for quite a considerable amount of time, but it is what it is. The market owes me nothing. And just to add to that, AU 4 hour 50 MA. We've now broke up, created a high, higher low, higher high. So it's very, very, very difficult to look to want to short AU. I do still believe there is there is a couple of methods to take a short position, which we'll discuss. But it's the understanding. I mean, there is decent range. We're taking the position down into the 4 hour 50 minute. There's a decent distance away from it. That's fair enough. I wouldn't be looking to take long positions anyway because we're in the higher time frame order block for price to want to come short out of. So, I mean, excuse me, yeah, short out of. So the only play really is short. So let's try and understand what we can do. So first and foremost, wick imbalances from the weekly time frame. Do I have any that I could look to manipulate? We're pretty much there. We've closed above on the daily, I believe. So that's where are we? So the wick imbalance was from so many alerts on AU. The wick imbalance was from Friday, the 1st of May. And today we're in it. Okay, so today we have an opportunity to use the wick imbalance. So we'll start from there. Where are we? Just here. Let's sync that globally and put it on all intervals. Cool. So don't worry at the fact that price on the 4 hour and the 15-minute time frame um, has or is trending above. The importance of this wick imbalance is on the daily time frame only. So what we'll be looking to anticipate is that today or how today closes will look something like this on the daily time frame. So you've got the wick and then we'll have the candle itself rejecting the wick imbalance. That's how I'm going to anticipate today's daily candle will look to close. So that's the thought process first and foremost. So secondly, how are we going to be looking to do that? Structure on the lower time frames. Why the lower? Well, because by the time price action wants to break the 4 hour 50 MA, break 4 hour structure to the downside, I believe that the trade would have gone. The wick imbalance is more of an immediate type of position, 15-minute time frame. So actually, although I may not be able to take EU based on what I believe EU is doing, ranging, there could be an opportunity on AU from the highs, which would be quite a decent position. So this line here, that is the wick imbalance itself. Let's put it there for us so we can recognize. Where is it? Cool. Around about here. Doesn't matter where it is. We understand on the daily that's what's going on. Bearish engulfing candle. I'm having a nightmare today. Bearish engulfing candle we have so far. I wouldn't want to do this immediately. What I'm going to be doing is going to the 5-minute time frame to understand where structure is first and foremost. So 5-minute time frame. Easiest, higher high, higher low, higher high and low. Higher high structure is clearly just here. Therefore, what I'm going to call it is a structure point. Therefore, for me to take this today, it would be a very aggressive position. And I do believe there are better positions to wait for. However, wick imbalances, very powerful concepts and they do work. So be looking for a break of that structure, price come back into the area. The 15-minute order block is there. There is also a 5, which is nice to see considering we're using the 5-minute. So what I'll do is put that in as well, how I'd be looking to do that. Lower time frame. 5, just about available. Let's see if there's a 1. 1 minute order block. Okay, even better. The key to the wick imbalance sub position is look to take that from as high as you possibly can in order to keep your stop loss, you've guessed it, above an area like that, which is always more than likely to happen. So that's why the first thing I'll be waiting to do on the 5-minute is understand where structure is, wait for that structure point to be broken. That's the first thing. Then when price comes back into this order block, I still have to wait for something. I'll tell you the best case scenario. Already got that bearish engulfing candle, but what I would like to see is a bearish engulfing candle on the time frame that I seek the structure break on. So on the 5 minute time frame now, if I get a bearish engulfing candle, that will simply allow me to do the process all over again. That will safeguard me against price being manipulated towards the highs because I've waited for that bearish engulfing candle. That bearish engulfing candle will then break 1 minute structure points again as the 1 minute is starting to trend up like so. Bearish engulfing, break structures, lower time frame break of structure, i.e., again, just a bearish engulfing candle, then on the 1 minute time frame, then I'd look to take that. So that is sort of the highest degree of wick imbalance that I'll be looking to take, only because there are a lot better pairs. Just that if there was nothing else out there, then I would probably be a little bit more aggressive. But there's kind of no need based on the favorites of the day that we have. So definitely I'll be interested to see if price breaks structure first and foremost. But until it breaks structure, I won't be looking at that simply because 15 bullish. And as we know, 4 hour, very bullish. But I think it could be a nice play regardless. If I get tempted into taking it, I'll let you guys know beforehand. But that's all there is for today. So what did we have? UJ pullback, US dollar CAD that I took this morning, looking to see if price is going to break structure, pull back. GU looking for break of structure, pull back short. GJ lower time frame order block. EU. I'm gonna have a hard time getting over it, but I just think it's in a range. Therefore, highs and lows only. And then the way that I'll be able to potentially grab, let's say, a US dollar cross pair. If nothing else materializes, I'll just bring AU into the mix and trade the wick imbalance if it presents itself. So that's it for today, everyone. Boris, as always, I'll thank you personally for joining. Your attendance is
Thank you.
appreciated. Mana, I hope you gained some benefit from that as well. And looking outside, it is raining, so I've got a bit of bobs of errands to do, but I'm not driving, so I'll take my laptop or my iPad with me and stay in contact with you guys. Have a good trading day, everyone. See you all very soon. Take care.
Thank you.
No problem, man. All the best.